My name is Alfreda Jonker. I'm the Client Portfolio Manager at Alphinity Investment Management. Today I have Andrew Martin with me. He's one of the founders at Alphinity and also one of the domestic portfolio managers. Now that we're at the end of 2024, we will be reflecting a bit on the highlights of 2024 and also discuss what is ahead for the next year. So Andrew, as a starting point, what were some of the key highlights and outstanding factors for you of the last 12 months?
Well, the biggest highlight for 2024 was investment performance.
Yeah.
Investment markets were really strong, so from an absolute sense, investors got a good return. From an Alphinity sense, we had a very good relative returns this year, so it's been a great year. So that's the number one highlight. Underneath that, there was a lot to deal with, though. So there's still lots going on in the macro sense. If you remember, we came into this year expecting big rate cuts in the US. We ended up only getting a handful, and maybe even less into next year now, so that'll have its own implications. Our central bank decided that they were not going to cut rates, and maybe that stance is cracking a bit towards the end of the year, so that'll have implications into next year.
Yes.
We had a US election. I'm not sure it was a highlight, but it was certainly interesting to watch and has implications. But it's ended up with a president and a government that's likely to be stimulatory, likely to be pro-business and markets. That's a positive thing. And we had China finally show some intent in terms of trying to stimulate their economy. So far, a bit underwhelming in terms of detail, but at least showing some intent to try and stabilise things there. If you're an Australian investor, the big highlight was, what happened with banks. Banks are incredibly strong, kept pushing on. It was a sort of, like we saw around the world, sort of a narrow band of stocks driving our market up. In the US, it was Mag 7 and AI. Here was the banks, CBA and Westpac in particular. So that was an interesting highlight, and it'll be interesting to see how that carries on into next year. From a portfolio perspective, I think one of the highlights for us has been the re-emergence of earnings revisions as a driver for stock outperformance. That disappeared for a few years because of what was going on with in the macro environment. But seeing companies getting those upgrades being rewarded this year has been very positive for us and very good, positive for performance.
Well, fantastic. It's really great to see all our funds showing positive alpha over the last year. So let's shift tack and look into next year. What are some of the key sort of themes that you are expecting for 2025?
Look, I think 25 is going to be, from a markets perspective, going to be a bit tougher to replicate what we had in 24. Really just because we've had such a strong period in 24, your starting point from a valuation is higher, expectations are higher, so to replicate what we had is going to be difficult. That's not to say we see any cliff or any major issues arising. We wouldn't be surprised if there was some consolidation in the market given how strong things have been. But for things to be materially worse, something would have to deteriorate quite a lot. And as I say, there are some positives that we spoke about, the US elections and Trump and being pro-business and markets, and certainly going to be stimulatory. We've got an election here in Australia. There's going to be lots of money thrown at the economy, I would have thought. There are going to be more interest rate cuts into next year around the world in various markets, including potentially Australia.
Yes, hopefully here as well.
That's positive as well. So there are lots of positives. On the other side, there are things to be concerned about or worried about to watch. What do tariffs do when Trump comes in? How does China react to that? In Australia, the economy here is softening. The consumer is under pressure. So how does that play out? And particularly in relation to interest rates and inflation in Australia. And of course there's
the Aussie dollar.
And the Aussie dollar, exactly. And then we've got lots of geopolitics still going on. So it's kind of a balance between, there are lots of positives to the point that there are things to be concerned about. We'll have to wait to see into 25 how they play out. But at this point, no major cliff or issue, but it's going to be much harder to push on from here given how strong the market's been.
Yes.
I think the thing really going to be, we're going to be talking about next year is what happens within the market. The potential rotation. It's been a narrow band of stocks that have been driving markets. Do we get new earnings leadership into next year? What is going to be those drivers? Even if it's a flatter market, what rotation are we going to see? So, for example, if things perhaps economically are a bit tougher, or some of those companies that have driven the market sort of run out of steam, do defensives get more of a look in?
Yeah.
If there are interest rate cuts here in Australia, do domestic cyclicals get more of a
Yes.
look in? So it's those kind of things that we're sort of paying attention to, because I think that's going to be the theme next year. Is going to be what drives the market, not necessarily how much the market is up or down.
Yes. Good time to be in a style agnostic type strategy like ours.
Absolutely.
That's very adaptable to all the different market cycles. So how are we positioned across our Australian funds into 2025, given what you've just explained?
Yeah, look, the portfolio is reasonably balanced. We just went through, there are positives and negatives. The market valuation though is high, expectations are high. So I think it's it's worth adding a bit of defensiveness into your portfolio, and we've done a little bit of that in the last quarter. I think as we think through to next year, we are putting our minds to whether domestic cyclicals, whether the consumer will do better if we start to get some rate cuts here in Australia. At the moment, these are all at the margin because we do want to see how things play through. As you said, being a core portfolio, we can be flexible about where we move.
Yeah.
And I think you want to be sort of on your toes into next year, but I don't think you want to make huge bets now until we see what plays out, particularly in the US, and then here economically with an election. Let's see how that plays out first.
Great. Well, thank you very much, Andrew, and thank you for listening. For more information on the outlook, please visit our website on alphinity.com.au. Have a look at our latest monthly notes as well as the insight section. Thank you.
Thank you.